All right. I think we are live. Okay, we are live on Instagram. All right, and we are live here. Welcome, welcome, everyone. Welcome to another edition of Instagram Live. We have a very special guest today. We have Kelley Halpin, who is a CEO of Mesa Rewards. If you haven't heard about Mesa Rewards, it is the hottest program, the program that you didn't know you needed in your life. I was very fortunate to go to your launch party back in November when I first heard about this program. And I was blown away because why are we not earning points on our mortgage? And Kelley's here to kind of share with us a little bit about how this all got started. So welcome, Kelley. I want to thank you for joining us.
Yeah, no, thanks for having me. Excited to be here.
Kelley, this is, how long has Mesa been around? Like, when did this idea or conceptualization start? How did that come about?
Yeah, so we're still a very new company. We're only about a year and a half old. So arguably the worst time to start a venture-backed company was August of 2023. So that may tell you something about me and my personality, but really came out of my time working in startups and consumer finance. So I've kind of always been in the startup world. Got very lucky, got a job at Uber back in the day when that was a black car company, and that kind of got me into it. And worked in consumer finance and rewards and loyalty, and that's really where the idea for Mesa came from. So in that world, as you probably know better than me, you're just looking at consumer budgets and trying to capture spend and share a wallet. And when you do that, you realize pretty quickly just how much money people are spending on their homes. And so ultimately, that's the problem we want to solve here at Mesa, what we call the home cost crisis, which is that home ownership in the US is becoming more and more unaffordable. The average American spends a third of their income on their home, going up every year. As a nation, we spend over $8 trillion on home ownership, which is more than healthcare, Social Security, and national defense combined. And so what we want to do is give you value back for every dollar that you spend on your home. And we do that by bringing the credit card style benefits rewards that everyone loves, bringing those to all the financial products and all of the spend for homeowners that have traditionally never had it before.
Yeah, absolutely. I mean, I bought my home maybe 11 years ago, 12 years ago. If I would try to buy my home now, I don't know if I can afford my home nowadays. So it's become much, much more harder to reach. But it'd be nice to be able to get points and travel points, especially for something that is really one of our biggest expenses, our home. Can you give us a little bit idea? What is the core mission of Mesa? Like, are we going to be spending only and earning only on mortgage? Is that and is there mortgage? Don't you have a mortgage program itself or some kind of marketplace as well?
Yeah. So, again, for us, our mission is to make homeownership more affordable and rewarding. And so, there's a lot of ways that you spend on your home. That could be, making your mortgage payment. It could be spending on a home improvement at a brand like Lowe's. It could be when you get your mortgage or a HELOC, right? And so we want to be able to give you value back for all of those things. And so, yeah, that could be on our, the Mesa Homeowners card, which would reward you for your mortgage payment in addition to all of your, everyday spend on your gas and groceries, your home-related spend. We just added daycare not too long ago, which for a lot of folks is actually their biggest expense, even more so than their mortgage. But yes, it could also be, getting a mortgage through us as a broker in one of the states we're licensed in, so that we can give you 1 point per dollar on that loan. So $1 million mortgage is 1 million points, which is a ton of value versus not getting that elsewhere. So again, wherever you spend your money as a homeowner, we want to be able to meet you where you are and give some of that value back to you.
And is this for existing homeowners or for new homeowners as well?
It can be for both. We can, whether it's a new mortgage or a refinancing, and again, for the Mesa homeowners card, obviously, existing homeowners certainly, see the value in that. But if you're a new homeowner, particularly when you think about home improvement or decor, those are areas you're about to spend a lot of money. And so our value prop fits in really well with that, whether it's, some of the benefits we have, like Thumbtack in terms of home services statement credits or Lowe's statement credits for home improvement. So, we kind of want to meet a homeowner wherever they are, particularly just given, how much money they're spending there.
Let's talk about that. I want to get into the card a little bit. The Mesa's homeowner card. By the way, Mesa in Spanish means table, right? Does that have anything in relation to what the name of the company means?
I'll be honest on the name. It is extremely hard to find a name you can trademark in consumer finance. And, you want a name that is, short enough to fit on a card. And yeah, we do like Mesa because, it means table in Spanish, which is typically the kitchen table, sort of the heart of the home. It's also sort of an elevated, piece of land as sort of another term. And so, us as a premium brand in the space, like we like that, and it's broad enough to kind of encompass broader home ownership versus just necessarily a card or just a mortgage. But like most things, it typically comes down to legal paperwork, and that was the trademark we could secure.
Absolutely. So I was going to ask about the Mesa card. Who is this ideal Mesa card holder? If they were to get one, what does that person look like in terms of ideal clientele for Mesa as a company?
Yeah, and so I think part of this gets back to the problem we're trying to solve, which is the average homeowner in the U.S. is now 30. First-time homeowner is 38, and it was 36 just a couple of years ago. And so for us, our target customer is really the millennial mom and dad. It's sort of that suburban house owner. They have they're high income, high spend, and they spend a lot on their home and the things in it. And so what I saw personally, just working in credit cards for a long time, is traditionally they skew very heavily male. And we saw this emerging, sort of female consumer that is getting more degrees, making more money, really the CFO of the household, as we like to call her, Holly the homeowner. Like that's who really we're trying to serve. And so that shows up in our Val prop, things like, there's not a free TSA pre-check membership, there's a free, big box membership, right? Or, we want to reward your gas and grocery spend or your daycare spend versus necessarily, travel and dining. And so, we think that this consumer of that, millennial mom and dad, the suburban house owner versus sort of the 25-year-old in Manhattan that rents or owns a condo, like we just think this consumer is really valuable in the same way a business traveler has been very valuable to date, which is high income, high FICO, high spend. She just spends in a different area. You just need to meet her in a different way, and she wants different benefits and rewards with her particular payments product.
You mentioned her a lot. Does that mean that you're, the ideal person is typically female, or like are they the ones that control, like my house, control the decision on the financial decisions typically?
Yeah, that's why we call her the CFO of the household. Typically she is the one making the purchasing decisions in the home. And what we also seen is the fastest growing demographic of homeowner is single female. And so certainly, our card today is pretty evenly split across gender lines, but that's in contrast to most credit cards that are just historically very heavily male. And so, we want to meet that sort of millennial homeowner, and it does tend to be, kind of a parent. And so it can be a couple, it can be the mom and dad, but, typically that is who we have been building for. And we think we see the biggest opportunity because they've never really had something that's been built custom for them.
That's good. That's great. I think that's what I think my audience has really been looking for quite a number of times. Let me ask you: is there a particular? You mentioned premium on the card. It's like premium homeowner. So I see a lot of the credits that you normally only see like on a really high end card, but you have this on this card. Many people don't realize, but this is a no annual fee card with credits. Is that right? Is this an annual credit or is this a one-time credit? Just curious.
Yeah, no, well, the way I view that is like you already bought your home, so I don't think you should have to pay an annual membership fee, right? Like you being a homeowner is what gets you the membership here. And so, no, we don't think that you should be paying on top of every dollar you're spending on your home an annual membership fee on top of that. There are credit card companies out there that are happy to charge folks, but I don't think that's the best deal for the homeowner. And so, no, we want to offer those great benefits as an annual benefit, just like some of the other premium cards in market that tend to be more travel and dining focused. But again, we want to maximize the amount of value we're able to give back to the homeowner.
Now, one of the credits I think is like a big, like, can I get a Costco membership? Did I hear like I can get a Costco membership with this card? Like it'll pay for that?
Yeah, so we have a big box membership as part of the benefits. So yeah, that's one of the benefits that our customers most excited about. Kind of talking about that Holly or Hank the homeowner. That is the brand, and that's the category where they just spend a lot of money is at those big box stores. And so again, like we didn't hear a lot of clamoring for another card that would give you a free TSA pre-check membership, but this was something that our consumer really valued. So we're really excited about that. It's a really great benefit.
And I know just from the party itself, from the launch party, I saw that you have a really focus on pets. Can you give us a little background on that? Like what kind of credits do we have if you have pets at home?
Yeah, so this one definitely comes from me because the love of my life is my 2-year-old chocolate lab, who I got when I started the company. So Tex is his name. Yeah, so he's kind of been our official mascot here. But again, it's what we saw is like this consumer, they spend a lot on their home and the things in it. And typically that's dependents, pets or kids. And so yeah, we've got an amazing benefit with Farmer's Dog, which is a brand that I use and spend way too much money on for my dog. His grocery bill is more than mine, so like that's a great benefit that I love. And then we've also got WAG as a great partner for dog walking and pet sitting. And so that's just an area that this consumer tends to spend a lot on as well. So you think about your home, like the people in it are usually the most important piece of that, right? And so we want to make sure that you're rewarded for all the money you're spending there as well.
That makes sense. My buddy who has a dog used to work in an office where he would have his dog food get delivered, like food delivery, but it was for his dog. Like when you said it's for his children, he's like, my dog eats well.
Yeah, my dog eats better than me. And yeah, we have a very strict, you must love dogs to work here at Mesa. That's in every job description we post.
Yeah, that makes sense. That totally makes sense. Now, the card has some great 3X categories. There's a lot of it's 1X, but there's a 2X in groceries, 2X for gas, 2X for EV charging. So you have an electrical vehicle, you can get charged for that. And then I saw 3X for insurance. Now, I've been in insurance for many, many years, and to see insurance is really, really great for the homeowners. So homeowners insurance, someone asked, what if their homeowners was in their, or their taxes were in escrow with their mortgage? Is that something that they can be able to count, or how does that work if it ends up being in the escrow altogether?
Yeah, so I obviously happy to follow up with that person and look into that specifically. It does tend to depend on what the merchant is, and so it may come down to that specific, but we always try to be flexible and make that work for folks if we can. So yeah, the way we've thought about it is you kind of mentioned gas and grocery and EV charging, and then home related spend is a 3X category, and so that in the same way that American Express and other brands sort of pioneered this travel and dining category. Like, this is where this consumer is actually spending the most of her money. And so that's where we want to give her the most value. And so, that can be home improvement, home decor. And we recently added daycare to that as well, because that is, again, just a really big chunk of spend for folks.
My eldest daughter works in one, so she's I think the second parent is working just to pay for the daycare. It's just like, yeah. And then you got utilities, you got home services. So let's talk a little about the home services. So are you talking about like a contractor coming in the house and then doing repairs in the house, or they're being remodeling? Is that what we're talking about there?
Yeah, as long as they accept Visa products, and it's money you're spending on your home, we want to make sure that you're getting rewarded for that.
Okay, that's awesome. So 3X on 3X on utilities, 3X on daycare. That's huge. 3X on the homeowners insurance and the home services, and 1X on everything else. So right now, you're going to be able to take those points. I get this question all the time. You can take those points and redeem them in the portal. You have a travel portal, but you also recently came out with travel partners, like airline partners, and I was really excited about it. I saw Thai Airways, Vietnam Airlines, Air India, Finnair, and then Accor was a 1.5 to 1 transfer there. So you got one hotel, a major one, and then you have like 5 airlines. Is that something that we can see more of, or is this just the start of it, or is this it for transfer?
No, yeah, it's a great question. And so when we got to when we launched, that was a lot of the feedback we got very quickly from folks was around people love having transfer partners. So in addition to obviously our travel portal and gift cards and cash value, like that was a category people were really excited about. And so we were able to move quickly in just a couple of months and bring on our first batch of partners. We've got a bunch more coming in the hotel and airline space, and actually some ones that are outside of those categories in terms of other loyalty programs that you'll be able to transfer your Mesa points into. So that's a big area of focus for me and the team in terms of, points are only as good as where you can redeem them, right? And so the more options we give to folks, the more valuable those points become. And again, that gets us closer to our mission of making home ownership more affordable and rewarding. So we have definitely heard that feedback. We're excited for what's coming down the pipe in the next couple of months. So I'll have more to share then, but just know we're definitely working on it.
For those who are not familiar with some of these airlines, I just want to share with you, if you're watching this for the first time, you don't need to redeem Air India miles for Air India if you're going to India, because there are partners with United Airlines. So you can actually use your Air India miles on United as well. It's a roundabout way of doing it, but it's a great way to do it, folks, because Air India is on a distance base. So if you're doing a short flight, it can start as low as 4,000 Air India miles to fly United flight from LA to Phoenix, which is fantastic. You can't get that out of United nowadays, but to be able to get that out of Air India is fantastic value. I'm not even sure, Kelley, if that was your intention, but it is a great one for points and miles, folks.
Well, that's why you're the points educator and I am not.
I also want to bring up Accor, folks. If you guys have Accor hotel points, I know this is not the program. It's not the Hyatt, the Hilton, IHG, and Marriott, but Accor has some of my favorite program. They have M Gallery. Guys, if you ever have a chance to go M Gallery, it's one of my favorite brands out there. Sofitel, which is a great brand. They have one right here in Beverly Hills. The Fairmont Hotel, folks, on Raffles, which is the Singapore Sling. Go drop by for one in Hong Kong or Singapore. Those are great luxury brands you can be able to use your points for that, which I'm really excited about. Can you give us a little idea, Kelley, when it comes to the future in the next 6 to 12 months? Are we going to see, you mentioned already transfer partners, but what about, are there going to be more credits coming, or are you going to see more 3X categories? What can we be looking forward to?
Yeah, definitely. I'd say we've got some amazing benefits, like the statement credits you mentioned that'll be coming in the next few months with some big brands in sort of verticals like, home decor, big box, and otherwise. So excited to share there, as well as, the redemption side, certainly on the hotel and airline side, that's an area that we've heard a lot from our members they're excited about. And then some unique proprietary ones that would be in very homeowner specific categories, being able to, convert and transfer your points into things like, home services and home improvement brands. So we'll have some more to share there pretty soon. But again, all of that gets back to, we want to be able to give you the most points as well as make those points the most valuable for our members.
I want to make sure one thing is clear. Now, you have a platform that if you need a refinance or if you need a new mortgage, they can get that there. And for every dollar of the mortgage, so if they have $1 million mortgage, they get 1 million points, something like that along the way. But if they already have an existing mortgage, they don't need to become a Mesa member mortgage client to earn the points. They just need to have the credit card, right?
Correct. Yeah. So those are two, separate products. And so, if you're, just making your mortgage payment and you obviously spend a lot on your home, the Mesa Homeowners card is a great fit for you. But no, they're not at all tied together.
So all they need to do is apply and get approved for the Mesa Premium Homeowners credit card, which is a no annual fee card by Celtic Bank. And then they need to spend $1,000 at least on the card a month. That's non-mortgage. Is that correct?
In order to get rewarded for your mortgage payment, that is correct.
Yeah. So if you're wondering, if you have an existing mortgage right now, your steps are get the Mesa Homeowners card, spend $1,000 that's not mortgage related, and then now you'll get mortgage. But now here's the thing that blew me away, Kelley. You don't actually even have to pay your mortgage through the Mesa card. You just have to put it on your application and show proof that you have a mortgage, and they match it. Is that how it works?
Yeah, as part of the onboarding, we sort of verify that mortgage payment and amount so that we can, sort of properly reward you for it. But no, we don't require you to, set up anything new with your servicer. There's no sort of fees involved. So we try to make that as easy as possible for a homeowner to get set up and get started.
And what's the most points they can earn on the mortgage a year?
I believe right now, so you can earn up to 100,000 per year.
100,000. That's huge. 100,000 points a year on something that you already spend every year anyway, every month already on something like that. That's fantastic. Is there any misconceptions out there about the Mesa program that, is popular, that people ask you all the time that maybe you want to clear up? Like, for example, the mortgage, do you need to have the mortgage?
Yeah, no, I think, that's certainly one that, folks always ask about hey, like, where am I putting in a credit card? And again, like, that's, certainly not something you have to do. We just sort of validate that payment takes place. So it's pretty slick and seamless for consumers. So a lot easier than that. And then I think, the other piece is just, again, like, our benefits, I think, are pretty amazing in terms of, all cards in market. And so that's another area where, I think people don't realize that until they get into the ecosystem and just see how great some of those benefits are that we have in place. So, those are ones I would highly encourage folks to check out because, for a card without an annual membership fee, like, those are, pretty best in class.
Yeah, I think I had some questions here. I'll take some questions. I know Lynn's been asking about HELOCs. Is a home equity line of credit? Is that something that Mesa is going to be going into as a product, or is that not on the roadmap right now?
That's something we're excited about in the next couple of quarters. So yes, stay tuned on that.
Okay, that's awesome. And then what kind of, I guess, ideal credit client is Mesa looking for in general? Are they looking for someone who's, credit worthy, has good credit worthiness?
Yeah, typically what we're seeing from our members to date is it, tends to be, high FICO, high income. Just generally, most folks, again, if you're a homeowner, that's obviously going to make the card most appealing to you, and you've, likely already gone through the process to get approved for a mortgage and otherwise. So it does sort of, lend itself towards that sort of more affluent consumer.
I get this one quite a bit. Let's say they own two homes. How do you folks deal with it if they have two mortgages? I think you can only process one, right, Kelley?
Yeah, so the way it would work is we would sort of reward you for the higher of those two.
Out of the two. Well, and if the card holder, let's say, is the wife, but the mortgage is in the name of the husband, is that something that they can work out, or does it need to match the name of the person? I think that's another one.
Yeah, no, we deal with that all the time because obviously it's a lot of couples that own homes together. So that's a pretty easy thing that our support team's gotten really good at sorting out. So I would just encourage you to write in, and we'll make sure we take care of it and get you set up properly.
Okay, so there's a support team that's going to be able to assist if they have questions and things like that.
Correct. Yep.
Right. Okay. Can you give us a little background on your, I think I've had some people ask, like, what is the goal of Mesa in the end? Is it the credit card? Is it the mortgage? Is it, where's Mesa's, 3 to 5 year plan down the line look like?
Yeah, for us, it all works back from the sort of the customer and the mission. Again, like we want to make home ownership more affordable and rewarding, right? And so we want to be able to offer products that, capture that spend and give a lot of that value back to the homeowner. And so for us, the vision are all of those financial products for your home, so that if you need a mortgage or warranty or HELOC or whatever it may be, we are the best brand for you to get the most value back, because we're going to bring credit card style benefits, rewards to all of those things that have never had it before. So that is really, where I think we want to go, is like, we want to be that trusted brand for homeowners. When if you're going to spend $1 on your home or the things in it, that you want to use one of the products from Mesa to do that.
That totally makes sense. So Mesa is really a rewards and loyalty program, building up a base with financial products that surround it that you're going to be able to market.
Exactly. Yeah. And so, there's a number of financial products. Average homeowner's got, I believe, 8 or 9 financial products on average, right? And so, we want to bring loyalty to all of those.
That's awesome. Is there anything that maybe we haven't covered yet that maybe we should? I'm just kind of curious that I haven't asked you, but I know I'm seeing a few of the questions coming in, but just want to see if there's anything that we haven't covered yet that maybe I should have.
I would say we are always looking for great people to join our team. So, if any of the folks in your audience are looking for, a job at a fast-paced growing startup, we would love to chat with them.
What kind of people are you looking for? What kind of background or kind of experience? Yeah.
Yeah, I would say, across the board of all sorts of roles we need help on. I would say, people that are passionate about our mission, people that want to make home ownership more affordable, rewarding, and, are excited to roll up their sleeves at an early stage startup, which is certainly, not for everybody. It's a lot of work, but it's the most challenging, but the most fulfilling role that I think any of us will ever have.
Awesome. Lynn wants to know about the pet rewards. Is that something that can repeat? I guess maybe she's asking, is this something that's going to be an annual perk, or is this a one-time perk?
Yeah, so those should be evergreen, and we obviously have more that we're working on, just because we see that as a big opportunity and a big chunk of spend.
And she asked about vet insurance, which is the same thing I asked about pet insurance. I mean, if you're going to do pet, I think pet insurance is going to be right in there. There's a huge incline. During the pandemic, everybody got a pet, and now they got to take their animal to the vet. Is that something in the works or in discussion about pet insurance?
I mean, I certainly spend a lot on mine. We're always, I think pets are just like a very interesting vertical for homeowners where they spend. So, definitely interested in how we can be more helpful there and in ways we can work with partners in that space. So, certainly something we're interested in. We're still trying to figure out exactly what that could look like, but, it's a good idea.
Absolutely. I want to thank you very much, Kelley, for coming to join us. I think this was really helpful. People get a better understanding of where Mesa is going to be and where to go. And if we'd love to have you back when you have a chance to tell us about your new enhancements in the next few months.
Of course. No, I really appreciate you having me. You've been one of our OG supporters, so I'm always happy to join. And yeah, this was great. So would love to keep you posted on some cool stuff we've got coming. And yeah, thank you again for having me on.
Thank you so much. Thank you, everyone. Folks, if you haven't already, go check out Mesa Member on Instagram. They're also mesamember.com, correct, on your website. And you can learn more about them. If you folks have also any questions, you also can reach out to me. I have a referral link that gives you 5,000 points bonus when you sign up for the Mesa credit card. So if you have any questions, feel free to reach out to me at Ben's Big Deal. Kelley, I want to thank you very much for joining us today. It was fantastic. I hope you have a safe flight today as well.
I appreciate it. Thanks again.
Thank you. Have a good day.